Welcome, Herman Chan, Senior Bloomberg Intelligence U.S. Regional Bank Analyst. I'm Roger Thompson, BI's Regional Marketing Analyst. JPMorgan won the bidding to acquire First Republic Bank, further expanding their market position as the nation's largest bank. The rise in the shares suggests markets like this transaction. What are your thoughts?
Yeah, it's definitely a lucrative deal for JPMorgan. The slide deck that JPMorgan just produced earlier this morning mentioned a $2.6 billion immediate gain, so that's great for tangible book value purposes, and also the wealth management assets for JPMorgan really bolsters the existing capabilities of the organization. One thing we would note also is that with JPMorgan being the winning bid, it does shed light on the potential that the other regional banks that did try to acquire First Republic probably are in less of a position to do so, because the fact that these deals, this particular deal for JPMorgan encompassed the entirety of the asset, so both the underwater loans and securities, whereas the regional banks probably would have liked to only acquire the most attractive assets and leave the underwater loans with the FDIC.
Do you see this as being the end of the more acute liquidity phase?
We do. If you look back at the first quarter earnings results for the regionals, they exuded some strong stability and resilience from the deposit front, with deposits really only down about 2 or 3% on average. And the banks that have been also in the spotlight, like PacWest and like Western Alliance, these banks offered some really credible path forward in terms of asset sales, improving deposit trends, and also a path for increasing their capital ratios. So on that front, it does seem like things are stabilizing for the regional banks.
Thank you, Herman.